and welcome back. I'm Raymond Dahlman, President of DSA Financial Group, and this is the weekly economic update for March 1st, 2021. Hope everyone had a fantastic weekend, and let's go ahead and jump into what's going on in the world. All right. Well, last week the markets were slightly down. Some of that had to do with rising bond yields. Essentially what happens is bond prices go down, yields go up, markets shift to take advantage of the higher rates. So certainly not the end of the world. The Dow was down a little less than 2%, S&P about 2.5%, and the NASDAQ was down closer to 5%. So again, with everything that's been going on in the economy over the last year, certainly not surprising, but the market has held up pretty well under the circumstances. So again, rising rates have put a little bit of a damper on stocks last week. Looking at the market today, it looks like it has shook most of that off. The market's been up a couple percent. Today it's a little after 2 o'clock Mountain Time, so the market's already closed. Let's see here. Also, Chairman Powell, the Fed chair, has stated that we'll continue to keep rates at or near zero and continue the monthly bond purchasing program until the labor market is fully recovered and inflation goals are met. So, I know they're shooting for a 2% target in inflation, but I think they're going to get their wish sooner than later with the amount of dollar creation that we've talked about over the last few weeks and certainly over the last year in my client meetings. So, all right, let's dive over to some of the white papers that I'm putting out this week. Countdown to College, basically kind of a checklist of things you can do for your high school students, what you should be thinking about from freshman, sophomore, junior, and senior years of college. Most folks know that I'm not a huge fan of the college system. It's expensive, and I personally believe that you can learn most of the things that you pick up in college on the job or through the magic of YouTube. Also, doing reading on your own, I think, is very valuable. Just not a big fan. Like I said, college is expensive, and if you're just going to get a basic degree, my advice would be go out into the job market, learn some real skills, and then you can decide, all right, do I want to be a doctor, lawyer, engineer, whatever the case is, and then really focus on your area of expertise that you want to use in the real world later on. So anyways, it's a handy little cheat sheet for folks. Feel free to provide any comments on that if you so choose. Next, IRS rules are changing regarding inherited IRAs. In the past, you could stretch an IRA over the course of the beneficiary's lifetime if it was not a spouse. The big change has been that you'll have to exhaust IRAs within a 10-year period. Also, the other thing that has not changed is that if it is a spousal IRA, you can still treat those like as if it was your funds. You do not have to withdraw that within a 10-year period. Also, to keep in mind, if you inherit a Roth IRA, it has to have been opened more than 5 years to not have to pay taxes on the gains within the Roth IRA. So again, small changes, mostly affects if, say, you're inheriting something from your parents or grandparents. The withdrawal rules have accelerated so that you'll be pulling that money out and paying taxes on it a lot sooner. Why is the IRS doing this? Probably because there's a large group of old people who have a lot of money within IRAs and 401ks, and the sooner that money can be taxed, the government would like to get their hands on it. So it's I wouldn't say that it's they're doing this to help out the citizens. It's more because the country is broke. but that's my own opinion on the end of that. So tax efficiency in retirement. This is something I talk a lot with newer clients and especially younger folks. If when you retire, you're living in a higher tax bracket than you were when you were working, and you have all of your money in pre-tax investments, 401ks, traditional IRAs. That money has never been taxed by the government. So if, let's say, you lived on $50,000 a year during your working years, and now you're spending, say, $75,000 or $100,000 a year out of your retirement accounts, yes, you're going to wind up paying more in taxes because you're going to be in a higher tax bracket. So there are a lot of things you can do from a preparation standpoint. In your younger years, diversifying your tax position, having some money in pre-tax, having some money in an after-tax account like your standard brokerage account, and then there's a third tax treatment which is tax-free. That is where you have your Roth IRAs, your investment-grade life insurance, municipal bonds. So diversification just isn't having big companies, small companies, international, some bonds, some cash, some gold, and such. You also have to think about your diversification from your tax standpoint too. And the hard part is just, being aware or knowing or anticipating where the tax laws are going to be 10, 20, 30 years down the road. And that's unfortunately something that, we can't always, plan 100% for, but we can prepare for, what the laws are now, what they have been, and, work within that. So, but if someone shows up, in my office or on the phone with me, and they're 65 years old and they have, let's say, $900,000 in a 401k and $100,000 in their bank in savings, and say, all right, I want to diversify my tax, my tax situation. Well, there's not a lot to do at that point. You've kind of, you've built your house on the foundation that you have, so you kind of got to live with it. So these are things a lot of times you have to think about when you're younger. And, again, if you're planting a field for, for the food that you want to have for the next year, maybe you want to space that out as far as, I want some things that yield crops sooner and then have some for later in the season. So, again, something that if anyone wants to talk in greater detail, feel free to give me a call or shoot me an email. All right, some other changes to the Payment Protection Act. Evidently, smaller businesses were having trouble getting funds or getting loans, and so there's now, beginning February 22nd or 24th, which was last week, there's a two-week period specifically for small businesses to be able to get, I guess, head of the line. Also, there's been some calculation changes as far as, for businesses that maybe don't have employees, like a small business, someone like myself. It's just me who runs the show here, so not that I took any loans. I didn't. Being a good financial planner, I was prepared for these sort of events. So, but evidently there were some folks who got screwed out of some loans, and this is hopefully will be able to help some of those folks. And then also reduce of non-fraud felony restrictions. I guess there was a restriction that if you had a felony in your past, you weren't eligible for these loans. Again, some changes to try and help out some folks who maybe were left out and really needed the funds at the time. So those are the 4 white papers that I'm sending out this week in my email. Also, wanted to spend a few minutes just talking about the dollar, and again, the loss in value that I'm anticipating that we'll be having over the next year or two and into the future, unless we tighten our belts and pull the Band-Aid off and start paying down the debt that our country is accumulating. So I know I talk a lot about the dollar and the dollar index. Right now the dollar index is right around 91. I've had some folks ask me, what is the dollar index? It's essentially a measurement of the dollar relative to 6 other currencies, and those currencies are the euro, the franc, the yen, Canadian dollar, the British pound, and the Swedish krona. So essentially, it takes those 6 securities and compares its relation to the dollar. So going back to this other chart, right now we're in the low 90s. We had been up as high as close to 100. I guess that was about a year ago. The last 4, 5, 6 years, we've been in that 100 range. We'd had a little bit of a dip in 18, but throughout the early part of the 2000s, it was below 90 for a good bit of that, and it was at its strongest, in the last, say, 20, 30 years, right around the 2000s. So, prior to that, it had been as high as about 160 in the mid 80s. So, ask yourself, what caused the dollar to gain strength relative to other currencies in those 2 time frames? Well, in the early 80s, interest rates were jacked up by Paul Volcker, who was, I believe, the Fed chair at the time, pushed interest rates, very, very high in the late 70s, early 80s, and really helped strengthen our economy. We were paying down the debt, and we were making some real progress. And then the last half of the 80s, we started spending again like crazy. And again, Clinton in the 90s we had a balanced budget. Again, we had a surplus, and you can see again the dollar strengthened during that time too. There's not been a lot of fiscal responsibility though the last 20 years, so you can see how it's had an effect on the dollar. And just myself, this is my own opinion. I personally feel that the dollar is going to lose strength, based upon the dollar creation, the increase of cash in the money supply, and let's hope that there's some brighter folks in Washington who are going to come to their senses and get their crap together. But as of right now, I'm not holding my breath. Let's see. The national debt is at 27,960,000,000. So, or billion. I'm sorry. Gosh, a lot of commas there. Looks like we'll probably go over 28 trillion in the next day or so. I don't know if that's a good thing. Well, it's not a good thing. But per citizen, each human being in America owes $84,000 to the government. And each taxpayer, since only 1 in 3 people actually contribute to the system, me and my wife each owe 223 grand. So that's awesome. So like I said, I'm not real pleased that no one is talking about this. I can't be the only guy screaming into the wind about this. And, my fear is that we'll turn this country into the Weimar Republic, and you'll have to bring, wheelbarrows full of cash just to get a loaf of bread. So anyways, all right. Well, I've been yapping on for about 13 minutes now, so I'll go ahead and wrap things up here. If anyone has any questions, concerns, or would just like to talk about what's going on in the world and how you can help prepare for what I think is going to be a rocky ride for over the next few years, give me a buzz. Also, like, share, and subscribe on all the different media outlets I share this: Facebook, Twitter, YouTube. So that's about all I had for now, and I hope everyone has a fantastic week, and I'll talk to you definitely by Friday. Bye-bye.